We are paid on commission. We're not salary.
We in the mortgage business are saying there's something really wrong with that.
Getting the best rate does not equate getting the best mortgage.
That's a big red flag.
We're putting in our time without actually getting paid for it until it's done.
It's never easy.
Welcome to another installment of Real Estate and Beyond. I am your host, Gurfinkel, and my guest today is actually from within the mortgage industry. So far it's been people who are near, close, or financial advice related to the mortgage industry. And today I have with me Chris Medellin with Loan Depot. Yes, he is with another mortgage company, but let that not deter you, because today we're actually talking mortgage, but not mortgage advice per se. We're just talking mortgage, so listen on. There is a lot to talk about, and there is a lot for people to learn. Chris, take it away.
No, thank you. This is amazing that you, first off, your studio is really just dope. I mean, like, I wish people can see it from my angle, but there's so much going on here. But no, thank you. I mean, we've been trying to get this done. I think we had to reschedule one time, and then your videographer got into an accident right before this. So luckily they're okay. But yeah, just crazy stuff just going on. But I'm happy to be here. So thank you for inviting me. This is exciting. And by the way, I think so many people in the mortgage industry are not collaborating with each other the way that I think that they should. And like, everybody wants to stay within their company, and the competitor is like the enemy. And so I think it was really cool that we met in the mastermind, and then now we're here doing a podcast together. So thanks for having me.
Absolutely. It is my pleasure. And this is exactly the reason that I wanted us to talk, is because, yes, everybody views all of us in the mortgage biz as separate, as different little fiefdoms. And we're not indentured serfs to each fiefdom. We are collaborating. And not just with Chris. I've always believed that there is enough business for everybody for the taking. Therefore, the more we collaborate, the better mortgage people we become, the more knowledge we can share with each other and help our clients out and help the consumer out as a result. Collaboration brings more information, and that's what we're going to talk about.
Heck yeah.
People thinking of us working for different companies as enemies to each other, as absolute competition. Competition, yes, to a point. But that's one of the things that I wanted to open up with, actually.
Yeah.
Yes, we work for two different companies. Yes, we've been around the block a few times. We both have quite a bit of an industry experience. But at the end of the day, the things people do when they try to pit us against each other, regardless of the company, that's what we're going to start with.
Yeah, I see it every day.
So what happens when somebody goes to shop for a home loan?
I mean, there's so much that happens. I mean, I think in the last several years, the margin on what mortgage companies made on a loan has eroded so much, because a consumer goes to their phone and they immediately try to shop, their rate the way they probably would a hotel or, a plane ticket. And there's this idea that, if I shop it hard enough, I'm going to get a better deal. And yes, that could be the case, but there's also a dangerous factor in there. Like, if you compare one option to another option and you can get a better rate, it doesn't necessarily mean that person structured it correctly, because there's a lot of times where we have lost a deal to, like, let's just say a builder. Builder has their own in-house mortgage company, and we lose a deal because they're giving them like $10,000 in incentives to go towards the upgrades of the home. It happens all the time. You're working with a customer for months and months. They walk into a new build, and then all of a sudden they think they're getting a better deal, only to come to find out that they're calling you back because that deal fell through because they didn't know how to structure the loan.
Right.
And for the customers that you help and that I help, a lot of them are self-employed. There's a lot of know-how on how to structure a self-employed borrower. And the person working in a field where they're being given the deal and giving a very low rate doesn't necessarily know how to structure that the way that a professional like you would. And so it's not always the best case for the client. And you end up losing deals and getting them back. At the end of the day, the consumer is who loses when they think that they're going to game the system and go shop. It's not always the best option.
So let's talk a little bit about the system, because you just made a great point. Consumers think they can outgame the system. What is the system?
Yeah, I mean,
as far as pricing goes, people think that interest rates, well, first of all, it's all about the interest rate, which it never is, as you just mentioned.
Yep.
And as a matter of fact, years ago, I had a client say an interesting phrase to me: getting the best rate does not equate getting the best mortgage. So if you really think about that, you just nailed it. Just because somebody gets a better rate does not necessarily produce the best mortgage outcome, the best mortgage program that fits their needs.
I can give somebody a really strong rate right now. It may mean they're going to have a higher down payment.
Right.
It may mean that they're stuck in that deal for 3 years.
Right.
Because it's a down payment assistance deal. It could mean that they're going to have an insurance on that product that they didn't know they had. It could mean a lot of things. And even though the rate, it could even mean that they have a higher payment because they got a lower rate. So there's so many factors that come into play when you're dealing with somebody who, maybe hasn't been in a mortgage industry a long time. And I'll give you a really good example of this. I had a loan officer. So what I do for a living is I build branches. So in the retail business model, there's these locations of like fairways or loan depots where a cluster of loan officers will work, and there's a leader, and they share resources, and their job is to go out to the market and really help consumers get into homes. So a lot of times I'll get a call from somebody that says, "Hey, I'm competing with another, lender or whatever." We'll start to do the due diligence. And the first thing I'll do is I'll say, okay, well, I've never even heard of this company. So I'll look up the company, and I'll find it's like an internet-based lender that, is based out of like New York or New Jersey or something. And then I'll look up the loan officer, because they'll give me the loan estimate, which is, like kind of like gold for us, because we could see that this is what they're really locked in.
And you're probably looking for the name, and
I look at the name, and then I go to NMLS, which is public record, and I'll see that individual has been in a mortgage for 6 months, and they haven't, they have no know-how in what they're doing, but yet they just happen to lead with a lower rate than my person. And it's an astronomically lower rate. And so there's these shops that advertise low rates on the internet, and then they have a very inexperienced person on the end of the line that's offering a significantly low rate. They're fast talkers. They're trying to lock it down. And what it does is it erodes, what you and I are doing, because you don't get paid unless you close that deal.
Right.
And a lot of times you've done a ton of work to get that customer that far, only to lock them for them to go get poached by somebody else.
So let's stop that right
Yeah.
there and actually sidetrack for a minute, but hold the thought, please.
Yes.
And that's, I think, what the consumer doesn't really understand 99% of the time, is that we are paid on commission. We're not salaried. So being paid on commission, we don't earn the commission until the deal closes, meaning until you're happy with the home you're getting into and the mortgage actually closes. Seller gets the money, you get the keys. In effect, we're working for free. And sometimes we're working for you for free for not just days and weeks at a time, but sometimes months and years at a time.
Months, yeah.
Trying to get some people across the finish line, whether it's helping you fix your credit, where it's, coaching on financial well-being, period, and how you can save for down payment, looking for ways how you can improve your financial position. It's pulling in other industry professionals like credit repair, for example. Whatever the case may be, we're putting in our time without actually getting paid for it until it's done. I'm not griping about it. That's the nature of the beast.
No, it's okay to gripe, because it's really somebody's stealing your time, right? Exactly. And it's really unfortunate, because and I'll come in from a different perspective, because I'm watching it happen to a lot of people in masses. It's really sad, because I see loan officers who are willing to answer their phone on the weekends, who are willing to answer their phone at night, who are willing to put in the hard work to structure a loan. Because when people are looking for houses, it's usually at night and on weekends.
Precisely.
So they do all this work, they structure it a certain way, they ask enough questions, and then that person gets the rate and then goes and shops them. And then they go somewhere else. And the consumer can say, the consumer who's watching could say, well, just give them a lower rate. But it's not as easy as that. I mean, it's
not as easy or as simple, because that internet lender may not even be quoting accurate rate to begin with.
Yes.
So giving somebody, it's not like, you get a house and you get a house and you get a rate and you get a rate.
It's very,
The rates are tied to credit score, to loan program, to down payment level, and so many other factors that somebody misquoting one of the factors or not taking them into consideration will produce a completely different and inaccurate rate than it really should be.
Yes.
So just getting that internet quote undermines the professionals and creates that unnecessary strife first and foremost.
Absolutely.
But then it also puts you, the client, at risk and gives us all a bad name.
So many things, right? But I also will say, For every time you've lost a deal, you're a professional, you're really good at what you do. There's a loan officer who doesn't do well, who's maybe even working in the same company as you or me and is giving us a bad name as well. They're not taking their time with the client. They're treating it like, because I've heard it. I've seen people try to discuss rate via text. I'm like, you never, ever want to do that via text. You want to have a conversation. You want to educate your client on what's happened with rates over the last few years, because there's a sticker shock that's happening. I mean, there's people right now watching this that think that their rate is going to be in the threes. And you and I both know that that's not the reality we're living. So like I've told my loan officers, like if I were you, what I would do is I'd have a chart of what's happened with rates over the last several months so that you can at least educate the borrower on what's happened. So there's not that sticker shock, but that education has to be at the loan officer level. But then it is heartbreaking. I mean, heartbreaking when somebody shops and you've done all this work and they just go somewhere else. Or the other one is like you're dealing with the husband or the wife and you get them all the way down, and then the other partner comes in and is like, oh, well, I got a friend who, can do it. Or my dad knows somebody who's in lending, or my neighbor knows somebody and they can give us a better rate. And it's like, what are we doing here? So it's a really tough proposition when that happens. How do you handle it? I mean, I'm curious for you, like, when somebody does that to you, and they call you and they say, hey, I got a better deal somewhere else. How do you handle it? I'm curious.
There are multiple ways to handle it. Sometimes it is educating the consumer. I'll throw an example at you. I had a transaction up in Seattle where the buyer came referred by the agents, and we were in contract already when the buyer started to shop because a coworker told him.
Yeah, see that some third party comes in and they're smarter than everybody. You shop this,
Exactly, you shop this. This is this company I work with. Therefore, you should go to work with them too.
Yeah.
Disregarding the advice of the agents who have worked with him before.
Yes.
With the established trust, established, knowledge base. And this other mortgage lender was providing the borrower a quote or buyer a quote that I kept looking at. He kept looping me into the emails and asking if I can match. And essentially, yes, I can potentially match. There's no guarantee if the quote is legitimate. That's really the big word of the day, legitimate. And the quote was over email at first, no LE, no loan estimate, which is the official legitimate piece. And just like you said, I went online and I Googled the lender. The lender has been around for a while. Okay, one box checks out. Then I went on to Google the loan officer, and that's where it got really interesting. But before I get to that one, the rate he was quoting was not just, okay, it was lower than mine. Okay, fine, I can live with that. When it's legitimately lower than ours, I can live with that. But the rate was also considerably lower than their own published rate through their mortgage calculator online. Tell me that's not a red flag.
Yeah, well, it 100% is. But let me give some context to that. So let's say you're getting quoted a rate, and let's just say for the sake of the conversation, it's a 6.99 rate today. And there's usually either a cost to that or there's no cost to that rate. So 6.99 with no cost. Let's just say that's our benchmark. This person's offering a 6.5 or a 6.25 or maybe even a 5.99 at no cost. We in the mortgage business are saying there's something really wrong with that. There is something that is a too good to be true situation, because we know what the cost of service is. The best way I could describe it is we know what an iPhone costs.
Right.
So it's like saying, hey, we know that every iPhone is priced the exact same at every iPhone store, but somebody's selling it for $99 with no strings attached. That's a big red flag. You're like, that's not a real iPhone.
Does that get, good example, because I don't get somebody's feelers up.
Yeah, it's not a good iPhone. It's not a real iPhone. And a lot of times, like you look them up, and what was the story?
So I looked them up. Well, actually, I made them jump through the hoops. And yes, I did make them jump through the hoops that if he wants me to match the rate, that company has to provide a loan estimate to make it all official.
That's when you know.
And that's when I knew. I looked at the loan estimate. It still didn't look right. No, the higher fee was not disclosed. Still, the rate was way off from the actual published rate by the company, but it got better from there.
there were not one but two names on listed as loan officer and somebody else on the loan estimate. And that's when I started looking them up through the National Mortgage Licensing System, the NMLS. And by the way, any consumer can do that. In the comments, we will publish the link. You can look up how long your person has been in the industry.
How many times they're moving.
How many companies
What
they
are all
jump,
the red flags?
How often they jump the company.
If they have any, like if there anybody's reported them for, misrepresentation or anything, like you see everything. And same with realtors as well.
Exactly.
Yeah.
So as I started digging in, and to be fully honest, I think I've only done that twice in my career. I went to pull somebody's info because it was so freaking egregious as to what they were trying to pull on the client. At that point, it was not so much about losing the deal. It was more about actually wrapping my arms around the consumer, around the client, and protecting them because this was clearly not right. Lo and behold, this person has only been with a company for a number of months, not only 6, while they claim that they've been there for like 20 years. Caught in a lie. They've jumped companies around every 12 or less month to the most part. And it just, the whole background of that person was so sketchy that we had to bring that forward. We had to not share it with the consumer line by line, but basically start educating them on what they're dealing with and what they're looking at.
Well, a lot of times too, you gotta bring in the realtor because you're in contract, and for the realtor, there's a fiduciary duty to that client to make sure that they're getting the best price for that home. But once they go into contract, if they start moving lenders, that could have a deep impact on whether that deal is going to close on time. If it's not, and so let's say they go with the lowest rate. And they're now 3 weeks into, or 2 weeks, or even a week into escrow, and you got a 30-day escrow, it's very unlikely that that internet-based company or that company that doesn't have know-how is going to be able to close a loan in that short period of time. And so working local,
you still need to actually get the seller's permission for them to switch lenders,
there you
which
go.
can also jeopardize the transaction.
So you got to bring everybody in to say, look, here's what your client's trying to do. Here's the background. Look it up, and you make the call. And a lot of times the agent will flip out because they're like, no, we need to stay here. And, and it's the right thing. I mean, I get that, everybody's trying to save a quarter or whatever they're doing on their rate. But you have to look at the big picture and know that you're working with a professional. I'll give you a really good example of something that happened to me. So a few years back, my wife and I were like, we got to start setting up getting with a financial planner and setting up some mutual funds or whatever. Right. And so I wanted nothing to do with this. So she has a task to go and do this. And, the guy's like, no, I have to meet with you and your husband to do this. And I was annoyed because I had to go meet with this guy at like a bar, restaurant or something like that. And I go out there and he sits down with us for an hour and a half and strategizes our entire retirement situation. And he had charts and graphs. And in my head, I had like this much brain space for financial investing personally, like that much. And he used up every bit of it. And it was smart with him. You know why? Because I never knew what his commission was. I never knew what his price was. I never cared. I just cared that he was willing to present to me in a way that resonated with me. And so I do think if there's audience people that are lenders that are out there, one of the things that you got to do is really absorb that brain space. If you're trying to rush through the transaction, then you're leaving your client with brain space to go shop. On the flip side to that, you're going to get shopped no matter what. There's no way around it. But one thing I'll tell you. So one thing that, you met her. No, you didn't meet her. You did know her. Theone, the lender. Okay. So Theone, I did a podcast together. And one of the things that she said that stuck with me is like, when somebody calls her on the weekend, she'll legit tell them like, I want to be very clear. Are you using me or not? Because if you're going to shop this, you can shop it first, but I'm not going to spend my weekend doing this unless I know I have a commitment for you, because I'm good at what I do. And if you're willing to shop this afterwards, don't waste my time. And a lot of us are afraid to say that. Even saying it when I said it to you right now is uncomfortable. But I do think that there is something to be said about setting that expectation up front.
In the sales and commission realm, it really does take pretty sizable cojones.
Yeah, I know. That's what I'm saying. Yeah, but it's almost empowering.
She's right.
You know?
She's absolutely right. It is empowering. And I think that if more of us stuck to our guns and actually did that, then we wouldn't be having the conversations we're having.
Yes.
When we're getting blown up on the weekends, taking time away from family or blowing up family commitments. Been there, done that, guilty.
Right. Standing outside, your family's inside, and you're on the phone and you're trying to close a deal, help somebody get something, and then they shop you later.
And then come Monday, you help them get in contract. You talk to that listing agent on the home that you're so interested in. It's because you talked them into, or because you already have a pre-existing relationship with them. And then next thing you know, Monday or Tuesday, when they finally got in contract, thanks to your effort, oh, by the way, we're going with lender XYZ. Really? Like freaking really?
I'm so curious what your audience, please comment in the comments your thoughts on this conversation, because I think, there's a million ways to look at this, but as a consumer, if you are a consumer watching this, you have to understand the amount of hard work that your lender is putting into your transaction to just get you approved. They have to look at your income. They have to look at your assets. They got to look at your credit history. They got to look at your employment history. And every client is different. And then if you add a layer of, I own 5 other homes, we got to look at those real estate owned properties and understand the taxes, implications on every one of them.
5 businesses.
The businesses, the K1s, we got to look at everything. And then to do all that, only for somebody to say, okay, thanks, but I'm shopping you, is heartbreaking. It's the only way I could describe it. It is heartbreaking. I've even been watching you, because I'm not as close to the streets as you are on it, but I see the emotional reaction you have just talking about it, because it's so somebody just steals your wallet in the process. And it's sad, to see that happen to a lot of people, especially in this market. And I said,
it's good to have this blunt conversation, because I don't think anybody ever actually talks about it bluntly.
Yeah.
Other than what I see in online forums that are specifically lenders or specifically realtors.
Yeah.
But we never really tell our clients that. And I think if more people understood that it's not just, no hurt feelings, we're going with somebody else. We've spent the time away from our families, especially when it's evenings and weekends.
Yeah.
And you would come back and say, well, that's your job. No, it is not my job, because during the day, we're putting the pieces to your loan together. Mm-hmm. So by night, when we're working with you some more, or to get you into that dream home, no, that's not part of the job. Our job does not entail working 12, 14-hour days. How would you feel if your boss called you in on the weekend and, by the way, didn't pay you the overtime or didn't pay you, period? How would that make you feel?
Yeah. And people will say, well, that's the position you chose. That's, that what you're getting into.
But we didn't choose to be abused.
That's what I'm saying. But that's about, I can almost hear the audience saying, well, that's what you choose, or that's what, and at the end of the day, I think that what you have to realize is that, if you are apples to apples comparing your individual loan officer to another loan officer, or let's say the loan officer you're talking to, you don't get a good sense that they are doing a good job, or you don't get a good sense that they're giving you the time, then yes, I get shop them, and shop with a professional. And again, you can look up every loan officer's information to see how long have they been with the company. You can see,
how long they've been in the industry,
everything. And so knowing that, and there's also red flags. If I were to look you up online, you have a presence. You're on social, you're on YouTube. I can find you. If I can't find the loan officer and get to know them before I'm talking to them, that's red flag number 2, right? There's just so many, red flags that you can find.
Look at my reviews.
Reviews are a big one, So I would say, what are the top 3 red flags that you would say, right? You can't find them online. There's no reviews. You look them up and they bounce around every 6 months. Those are all red flags that I would say
definitely
on the loan officer.
Especially, it's not even no presence online, because, for example, my business partner at the office, while he is newer, yes, we all have been there. We all have been new at one point in time. I used to have the same position as he as it relates to social media. I didn't want to be on it. Mm-hmm. I wanted to keep things
But
private.
Here you are in front of a microphone in a studio with a YouTube podcasting. That's the difference. I mean, that's the difference.
That is the difference. So there is a category of people who do want to keep themselves more or less private. So to me, the bouncing around every 6 months.
That's a big red flag.
To me, that's probably the biggest red flag. And then the company that they work for. Because no names, but if you can't find the reviews on your LO, because maybe they are new and you were. And by the way, like my company, Fairway, uses experience.com. Well, Experience only posts to Facebook. It does not play well with Google, unfortunately. I think now there are fixes in place. So we will be showing those on Google. And I do have a few hundred reviews on Experience and they're high ranking. But like notwithstanding that, look up the consumer reviews of the companies. Go to Ripoff Report, go to BBB. Basically, Google, as I always say in my videos, Google is your friend. In this regard, Google is definitely your friend. So Google the company and Google the company reviews. Because there are certain companies that are online based, especially, mostly.
Agreed.
They're the ones that either employ people without experience or it's more of a call center setting or.
Yes. I mean,
it's churn them and burn them type of environment, kind of like the boiler room.
Yes. Right? I think that there's these, one of the ones that I don't want to, I think a lot of people, will see these LEs that will, I don't even know how they do it, but there's these LEs that I've seen on like TikTok and other places where it'll have like rated 599 and then it's like 15,000 in cost, right? And then people don't realize this. So they think they got a really good rate, but then hidden on the LE is this cost that are kind of meshed in with other costs that you think, okay, well, I got, title fees, I got attorney fees, I got these fees. And then there's this origination fee. Well, that origination fee is what you're paying out of pocket to get that 599 rate.
Whether it makes sense for you or not.
And does it make sense, right? Like how long are you going to play? Are you going to spend in the house? How, if you're buying the house and you're going to be moving in 3 years, probably, not a good idea, but talk to somebody about that. And the person that's pushing you, one of the things like, I remember when I went to go buy my wife a diamond, I hated that process because you would walk into these places to go look just to kind of get an idea. And it's high pressure, gun to your head. Like you got to do it right now, and I don't like that feeling. And to me, that's actually red flag number 4 is when you feel like this pressure to do something right now. The person that's working your loan should be taking their time. They should be analyzing all of your financial situation.
As I call it, look at the bigger picture.
Big picture,
ask for your plans. Ask what your bigger plans are.
Yeah, absolutely.
Not just focus on this one piece of your financials that is the house.
Yes. How long are you going to be there? What are you looking to accomplish?
Everything.
Yeah, all those things.
How old are your kids?
Important. Yeah.
Are the kids heading off to college or are you going to need to upsize in a couple of years?
Absolutely.
Or downsize?
Absolutely. And there's so many options like, cash in a market like this, cash is important. We know that in most markets, there's going to be an improvement in, the home in terms of equity. Position because, we know there's a limited inventory or we know there's a limited inventory, but I don't know if but if you look at your situation, it may not make sense to put 20% down, but if you're willing to do it, somebody's going to let you do it. And it's up to us to look at your short-term, long-term goals and maybe say, hey, we have this amazing option where you could put no money down, or you can put 3% down, or you could put, there's all these options, but it's really, if you're talking to somebody, you say, look, I'm putting 20% down and they spit out a rate, big red flag, The other thing is like, I'll see realtors get somebody in their car without a pre-approval or I had a realtor one time say, look, we don't want to get just give me whatever they say and I'm okay with getting them in the car, meaning I don't need you to, get all their financial information. I'm like, that's an utter waste of time.
That's a recipe for disaster.
Yeah, because you're getting them really excited about a price point that we don't know if they can afford, So it's just another waste of time. But all those things, drive into me saying, I think that you got to watch out for the red flags. Get an opportunity to know, like, and trust the person you're dealing with. And talk to somebody, like Ella, who knows what she's doing and knows the markets that she's in. So, I think you're an amazing loan officer. I think what you're doing is amazing. And thank you for having me, because this has been like a really cool opportunity to sit down finally and do this with you.
I think we should do this more often.
Yes.
Just from the standpoint of educating the general public, really.
Without a doubt.
Because I think that's the one thing that loan officers don't do well enough
Yeah.
is educate the public about the behind the scenes.
Yes.
We're all about trying to make it look so easy to you guys that at the end of the process, you come back to us and it's like, oh, that was so easy. Can I become a loan officer?
It's never easy.
It's
never easy.
If it were easy, everybody else would do it.
Yeah. Everybody, all my friends from back home will text me like, oh, hey, I want to get in the mortgage industry. I'm like, good luck. I mean, it's years. How long have you been doing this?
28 plus.
Yeah. See, so I mean, and every deal
is something different.
Will humble you. Like just when you think you got it, you're like, I got this. Boom, a deal will humble you.
It's like,
yeah. So, you got to respect the fact that you're alone. And guys, comments on what topics you guys want to hear about. And I would love to do this again with you, anytime. Just let me know.
I'd love to have you as a guest. So please comment below. What would you like to hear about? What goes on behind the scenes in the biz? Maybe we'll think up more red flags to watch for.
Would love it. Yes.
With the bad apples and
yes. And if you're an LO, drop them. It would be good to see what you guys see as red flags of other LOs that aren't doing a good job.
Thank you, Chris.
Thank you so much. I appreciate you having me.